Dominic, September and October, we were expecting a lot of new issuance in the pipeline after a quiet August. It didn't quite meet buy-side expectations. Why was that, and why did US issuance dominate in terms of volumes more so than Europe?
So I think issuance to date has been beyond previous records. So I think we're pretty happy in terms of the volumes that we've been seeing coming through. But I think September and October certainly, as compared to June and July, were lower in terms of volumes. I think driven by a couple of things. Firstly, some M&A processes in June and July didn't end up in a sale of those businesses. Prime example is DNA out of Finland, and hence those didn't end up going to the financing market in September and October. Compare that to the US, where M&A volumes in the run up to summer were fast approaching near-term records in terms of what we've seen over the course of the last couple of years. And the size of the M&A activities that we have seen have tended to be smaller, so sub 1 billion EV companies, versus the US, where you've had a lot more in the 1 to 4 billion dollar EV M&A, which obviously results in a higher quantum from a financing perspective. And then I think we've seen a lot more competitive loan market, and so I think where we assess whether an issuer has to go to the bond market or loan market, then I think that has created more competition for the bond market. Perfect example, Overture. Had we brought that before summer, it would have been an all bond refinancing. Post summer, we ended up doing a covenant-like loan in dollars and euros, and then a sub bond. So the bond there ended up being a quarter of the size that it would have been pre-summer.
Very interesting, and it's been a record year for new issuance. My question to you would be, who else is left to issue, given we've had an era of record low rates really and limited LBO activity?
So I think we think the makeup of the market going forward is probably going to be a balance between corporates, so public company issuance, and private company or LBO financings. I think that will continue going forward. We expect the LBO financings to increase in volume going forward as M&A activity picks up. It's always difficult ahead of issuance coming to actually predict, because I would say probably 40% of the issuers that we will issue debt for in the next 12 months, we don't know that they will issue debt today. In fact, in most cases, we don't know the names of those companies, but they do year on year come to the market. I think on the corporate side, we see a fundamental shift in the market in terms of commercial bank lending being replaced by institutional either loan lending or bond issuance, and we think that trend will continue. That naturally means that some corporates that haven't gone to the bond market before and have been purely financed with commercial banks will come to the bond market. And I think there will also be a trend. We saw, I think it was last week, Telecom Italia getting downgraded by one of the agencies. The other agencies are likely to follow relatively soon. We continue to see fallen angels coming into the high yield space. And I think that has a slightly different investor base than the traditional single B names, and a lot of the issuance there will continue to be driven by investment grade buyers of those papers. And obviously on the counter to that, you've got some of the names that were fallen angels 3 or 4 years ago migrating back up to investment grade. But I think net we continue to see an inflow into the asset class being driven by those need for those corporates to refinance.
Fantastic. Many thanks for your time, Dominic.
All right.